Well, it's. I think the public generally has a lot of misguided ideas about the role of trade for the U.S. economy and the global economy. It's not really a zero-sum game where the U.S. makes things and other countries make things, and if we're losing jobs in certain industries, then other countries are gaining. It's a lot more complicated than that, particularly if you look at the manufacturing sector. And a good example is motor vehicles, where there's really no such thing as an American car anymore. Parts come from all over the world. Um, in just about every kind of industry you can imagine in manufacturing, there are raw materials, components and things that again are coming from different places. And even the imports that we get from Mexico, about 40% of the value of those imports from Mexico are uh, generated by U.S. exports. So there's a lot of trade going back and forth, and it's all very interconnected. So if you're talking about putting tariffs on different countries' goods, things could really spiral out of control, and you get retaliation and weakness in global trade in general. And already we've been seeing the global trade slowing down to some extent over the last couple of years. So putting these restrictions on trade, it's not really going to be helpful for the U.S. economy. It's not really going to be helpful for the global economy. It's more a perception thing, and what we've seen so far is sort of piecemeal approach where you get criticism on certain industries, certain plants, and there's a change. Well, you can't really do that. For policy as a whole, it's got to be a blanket issue with global trade. So I think most economists are very wary of where these trade issues may go over the course of this year, and most, I think, really see it as a major downside risk. The hope is that cooler heads are going to prevail, and we don't see this sort of mass trade war going on. But it is a risk, and I don't think investors have really accounted for that possibility.